Hi, I'm Phil Grandy at philsgang.com. Welcome to my YouTube channel. Please hit subscribe, share, and like. I would really appreciate it. Okay, so we got the election behind us. And today, this is Thursday. Um, it's the November 10th. And we just had the CPI number come out. And the market rallied pre-market. The future's up 800 points. Everybody's all excited. Well, let's talk about that first, and I'll tell you what's going on in the overall market. So, if you bought a basket of goods a year ago, okay, you saved a little money in the month of October. Instead of 8%, you paid 7.7%. Whoopee. Gasoline is still up 17%. Now, again, on a month to month basis, if you bought a basket of goods in September, they anticipated they'd be up 0.06% today. Instead, they're only up 0.04%. Whoopee. So the bottom line is this is all just BS. We're going to be hitting the winter. The big problem is going to be fuel oil, heating oil, diesel. And these little nuggets we get is just part of the overall BS that they keep feeding us. The market's in serious trouble. And as long as we continue to be in a downtrend channel, I think we're down now 45 weeks since January. This market's in a 45-week crash. Just because you saved on a basket of goods going to grocery stores, instead of paying 8%, you're paying 7.7%. I don't think that's going to make one hell of a lot of difference to you. I don't think you'd be running around getting your neighbors together and decide to have a parade. The market's in serious trouble because the banks are in trouble. Nobody wants to talk about that either. There's a tremendous amount of loans out there, subprime loans, auto industry, that's killing the banks. We haven't even touched what's going to happen to the housing market. The housing market's already in big trouble. Sure, the yield came down today. The 10-year Treasury yield came down just a bit under 4%, 395, where yesterday it was up to like 411 basis points. Now we're down 395. But that's not going to make a hill of beans when you go get a mortgage. You're going to be paying 7% for a mortgage. Another couple of months, you're going to be paying 10% for a mortgage. So the only way we're going to see a difference in this economy and in the stock market where we turn this 45-week market crash around is what we did in 2018 when the market went down 20% for about 11 and a half weeks and then turned around and rallied about 85%. They used QE. They printed money and they bought treasuries to get the treasury yields down. And when treasury yields go down, the big tech stocks always take off. 2020, we had the crash, the COVID crash. Went down 32%. It was down, that lasted about 11 weeks, turned around and rallied 126%. Why? Because the yields went from 211 basis points down to 85 basis points. Well, that's not happening anymore. QE is over. If for folks who don't know what QE is, it's really simple. QE is where the government goes in and prints money. And when they print that money, they give a certain amount of that money to three of the big investment banks, like JP Morgan, Morgan Stanley, Goldman Sachs, and they tell them, go buy treasuries for us. And when you buy treasuries, that would keep bringing the interest rate down, the overall interest rate down. And when interest rates go down, the market goes up. And when interest rates go down, what part of the market benefits? Big tech. So we've had that for 13 years driving the stock market. But guess what? It also drove inflation to a 40-year high. And it reached that 40-year high when Biden got in, and inflation went up from the day he got into office, went up 14%. 14%. We're talking about a drop of inflation in a basket of goods from 8 to 7.7, and everybody's celebrating. Biden got into office in 2001, January 2001, and inflation's up 14%. So you're just not going to turn that inflation around. That inflation's there to stay. And the real problem is that the Fed's not going to turn around until they say, oh, gee, look at that. I went to the grocery store, instead of paying an increase on my groceries, 0.8%, 0.8 of 1%. Okay, it would be like 8 pennies. You saved 8 pennies on your groceries. Again, we're going to get worse because they're going to turn around and the Fed is going to raise the Fed rate. See, the Fed rate is the one you got to watch. The Fed short-term rate. Okay, that's different than the 10-year Treasury. The 10-year Treasury, remember, is what you pay for a mortgage. They peg that to the mortgage, okay? So they always look and say, okay, I'm going to borrow money, 30-year fixed-rate mortgage. They take a look at the yield. What's the 10-year yield? And they'll price that mortgage based on the 10-year yield. The more important one, okay, is the Fed rate. That's the rate at which the Federal Reserve sells money to my bank, and then if I buy a car or something, they then charge me interest based on what they're paying for interest from the Fed. Well, we've been near zero for for over 13 years. And when you're near zero, the economy booms, but also it inflates. So right now, to stop this inflation, believe me, they're going to bring the Fed rate from where it is now, 3.5%. Okay, that's what the Fed charges banks for money. They're going to bring that up to probably 5%. They're going to have to, which means you're going to be paying a hell of a lot of money on a car or anything else. So again, don't get crazy over the fact that the grocery store, your basket of goods you went to, instead of paying 0.8%, you paid 0.4%. So the bottom line is this: the market is in deep trouble. The economy's in deep trouble, and because they could have started, because they didn't start turning this around in 2021, which they should have, it's hard to get out of now. It's hard to get out of. You go look at the S&P put up on a chart, it's a downtrend channel, and you see we got 4 distinctive lower highs. They've screwed up. In 2021, when the Fed rate was, let's say, 2.5%, what they're charging, what the Fed was charging your bank, 2.5%, and your bank turned around and charged you for a car loan, they could have turned that around. They could have fought that. They could have raised rates. We would have been fine. But they got greedy because the banks, the government wanted inflation to keep going up because the government could pay back their debt. In other words, if you have a debt of $1 million, when inflation goes up, that debt automatically drops. With, let's say that we owe the Chinese $1 million, that debt automatically drops from $1 million down to 800,000. It didn't drop because you wrote a check, okay, for $200,000, okay. It just, the value of the debt decelerates. It goes down. That's why the government, that's why Powell didn't fight inflation in 2021, because we have 31 trillion in debt, and they wanted to get that debt down. They don't want to cut spending. Remember, these idiots never want to cut spending. So they're going, oh, look at this. The more inflation we have, our debt is starting to decelerate because of inflation. The government was happy as hell. And the very, very wealthy, really happy, because they're called the asset class because they have all the assets. They have vineyards, they have cattle country, they have, and those assets going through the roof. So they wanted to keep inflation going. because they didn't give a crap about you or me. So now we're going to suffer for it. And just because food came down from 0.8% to 7.7%, it's not going to mean anything to us. So you got to learn how to deal with this market. When you're in a downtrend channel like this, the market's very volatile because the big institutions keep shorting the market. They make money shorting it. And then when these idiots on CNBC and Fox Business and all these fake business networks come out and say, buy the dip, the economy's great, everything's terrific. And then people go and start buying. The big institutions who are shorting, they buy their stock back. They cover their short position by buying it back, and the stock market goes up. And everybody thinks, oh boy, I better get in here and buy and hold. I'm going to get rich. No, you're not. It's going to fail. And every one of these rallies fails. Remember, we had a rally, 1,000-point rally, when the Bank of England came out and said they're going to go to QE because they had to save their pension funds. And everybody said, oh, Powell's going to go to QE. The market went up 1,000 points in 2 days, gave it all back. So no matter what kind of, so the rally we're having today on Thursday, the 10th of November, up 800 points, they're going to give all that back. There's only one way to fix this. You got to suffer. We got to let this thing go into a recession. But the rich don't want us to go into recession. They want the inflation. And the government doesn't want us to go into inflation. Congress doesn't want us to go into recession. They want inflation to help pay down their debt. So we will continue to suffer until the day comes that they finally say, we're so screwed, we now got to push this economy into a recession. We got to raise rates, the Fed fund rate, not from 3.5 to 5. We got to raise it from 3.5 to 8 or 9 to stop everybody from buying. So there's just no more demand for goods, and that will lay people off. That's the only way that's going to get fixed. They got to raise rates so high that there's no demand for goods, and that businesses lay people off, and then there's just no demand at all. Then you break the back of inflation, and we should have never got here. This could have been fixed in 2021, but the greed is what didn't fix it. So we have a great opportunity. I always tell my members of Phil's Gang, we got a great opportunity because we know how to sell short and we know how to buy. We know how to go long and we know how to short. We don't care what the market's doing. If it's going up and down, sideways, doing loopy-loops, we always make money. Because remember, the only way you're going to make money in the stock market, 80% of you lose money because you don't know how to sell short. And Wall Street set it up that way. For years, I've been in this market 55 years. I always, don't sell short. Oh, it's dangerous. Don't sell short. No, it's dangerous to their wallet because they don't make commissions. They don't make commissions when you sell short. So the only way you're going to make good money in the stock market is to have the skill of selling short and know when to execute going long. But selling short is the savior, not buying Coca-Cola or Clorox. I love that. Well, you know what? We should go buy some Clorox. We should buy what people eat or drink because they got to have cleaning materials, and they're going to eat potato chips. We buy that stock. You can't hide anywhere. There's no place to hide. You got to learn how to sell short. So we focus on that at Phil's Gang, and that's how we've been making money all the way through this 45-week downtrend, a 45-week crash. And you really believe that because today, on November 10th, they announced that the cost of goods went from 8% to 7.7% over a year? And that's a BS number. They're all bullsitters. Sitters, S-I-T-T-E-R-S. They're all bullsitters. So I think going into the end of the year, we're going to have a lot of volatility. I think next year, you're going to really see this market continue to go down, and you're going to see things get worse. But nobody wants to tell you the truth. Last thing. Yesterday, I couldn't believe what I heard. Some idiot on the fake business news network, I don't know if it was Fox or CNBC, came out and said, you know, this is $100 trillion in cash. Households have $100 trillion in cash. Well, I called my wife right away and I asked if she was stealing money from me because I can't find $100 trillion. Where's mine? I should at least have 50 trillion, no, maybe even 5 trillion, 2? Where is it? I called and asked. Because I said, this guy on CNBC this morning said, $100 trillion our households have. So I ran home and I checked around. I looked and I couldn't find any hiding places that she had the money. So I found out that would be about, take the amount of population we have, that would mean everybody has about $375,000 in cash. Couldn't find that either. Come to find out, the top 10% and the top 1% of population have about 80% of it. But they didn't tell you that, the Fake Business News Network. So look, there's an opportunity when markets go down, just like there's an opportunity when market goes up. And until you get that in your head, until you decide to deal with that and learn how to make money when the market goes down, you'll be part of the 80% who lose money. Now, we know one thing. They're not going to do QE again. Impossible. That's gone. Earnings are going to be worse in the fourth quarter. So market, it's not going to help the market. And we're not going to capitulate, meaning people aren't going to say, get me out, get me out. You know, in the market, the crash is over with after 45 weeks. Remember, 45 weeks, still the crash isn't over with. You know when it's over with? When your computer starts shaking and the table starts shaking. People start, get me out, get me out. I don't care how much money I lose. Get me out, get me out. That's when you start buying stocks. Until then, please learn how to sell short. Well, that's it. Now, please go to my site, philsgang.com, and you can sign up for 10 days, and it's free. And remember also, every day, if you want to know what I think the market's going to do, usually I'm right, just go to my YouTube channel, philsgang.com. And again, take that information, join the gang for 10 days. It doesn't cost you anything. And learn how to sell short. See you on the charts.